The US economy has contracted by 32.9%, the worst quarterly fall in history. The record plunge in GDP of the April to June quarter is all thanks to the COVID-19 pandemic, which pushed struggling businesses to shut down during the lockdowns, forcing millions out of jobs. The previous quarter, that is January to March, had recorded a fall in GDP of 5%. During which the economy officially entered a recession triggered by the virus, ending an 11-year economic expansion. Historically, the previous worst quarterly contraction in US was a 10% drop recorded in 1958. A 32.9% contraction in GDP in the April to June quarter, however, is unprecedented and was driven by a deep pullback in consumer spending, which accounts for about 70% of the economic activity. Spending by consumers collapsed at a 34.6% annual rate as all travel froze and shutdown orders forced many restaurants, bars, entertainment venues, and other retail establishments to close. Business investment and residential housing also suffered sharp declines during the quarter. Government spending, diminished by a loss of tax revenues that forced layoffs, also fell. The job market, the most important pillar of the economy, has been severely damaged. More than 1.4 million laid-off Americans applied for unemployment benefits last week. It was the 19th straight week that more than 1 million people have applied for jobless aid. Before March, the number of people seeking unemployment checks had never exceeded 7 lakh in any 1 week. Moreover, an additional 8,30,000 people applied for unemployment benefits under a new program that extends eligibility for the first time to self-employed and gig workers. As per the Trump administration, roughly 30 million people are receiving some form of jobless aid. The unemployment rate in the country has surged to 15%. However, going forward, most analysts expect the economy to produce a sharp bounce back in the current July to September quarter. The Trump administration, too, is betting against the outcome in asserting that the economy will undergo a sharp V-shaped recovery. Yet many economists note that the economy can't fully recover until the pandemic is defeated. The Fed chairman warned that the viral epidemic has been endangering a modest economic recovery and that, as a result, the Fed plans to keep interest rates pinned near zero well into the future. This brings us to India. How are we going to fare in Q1 GDP? The data which comes out on August 31st. According to the latest Reuters poll of economists, the Indian economic growth outlook remains in doldrums amid surging coronavirus cases and renewed lockdowns after a nationwide shutdown from March to May. Reuters poll suggests in the quarter gone by, the Indian economy is forecast to have shrunk 20%, the steepest fall in recorded history. The Indian economy is likely to contract this quarter and next and in the fiscal year as a whole, according to the July 20th to 28th poll of nearly 60 economists.